Okay, guys, so let's talk about what just happened. Apparently, we got the pricing of the debt or convertible notes. They're massively in debt, you guys. Like I'm telling you, this company of ours not gonna move. I'm done. I'm not gonna be here anymore, you guys. I'm so sorry. You know what? This is going to be my last video. No, of course not. Just joking. Just joking. Alright, so hold on 1 second. I guess the dog is trying to do something right now. Okay. Alright, so I'm gonna only be here for another hour, maybe an hour and a half at most. I do have to go after that, so it's gonna be a small or maybe a short one. Who knows? Depends. Yesterday it got cut off short, so I was like, and then on top of that, I slipped something, so I'm sure you guys see it, but I cut it off. It's okay. So let's talk about what's happening today. Of course, to be expected. Right now, everything just crashing. Looks like Bitcoin is also crashing. Again, economically, right? Of course, we kind of expected this. I know, again, people are going to be bullish or bearish or whatever. They're gonna have their own opinion on all of these. But let me tell you something, you guys. This type of thing is a lot riskier than we imagine. But again, for me, GameStop is the less risky stock to be in my opinion. Obviously, especially at this price point, it's ridiculous. Right now, they're trading at close to, I would say, $10 billion. Okay, that's the market cap, and they just raise more and more money. At this point in time, apparently they just raised, instead of 1.7, it was upside to 2.2 billion dollars. I mean, what? And so it's whoever bought that notes, right, really need GME shares for that much. And so again, they're able to raise more money even now. Okay, so with that, it seems like they're upping it to close to $2.7 billion, and in 7 years at a 0% interest rate. What? Like, how is this not bullish? Like, I'm so bullish right now. But anyway, so of course I took this opportunity to jump back into GME. I did again trim some earlier. Not today though. I trimmed some way before that, kind of before the earnings. Just some. I'm not, going crazy or anything, just in case I'm wrong. But my call is still decimated, but it's okay. I still have some more time. I still have 2. I did not add more. I was imagining, okay, let me just wait until they announce the completion and all that stuff. Then I'll load up a little bit more. Now, when I said load up, I mean only 1 or 2 calls. That's it. That's what I'm reserving my restrain, okay, to only do that. Now, as far as the downside, obviously this is to be expected. I did not expect the price to be this low. I thought it would be, holding up around 30, 23, 20, 22 even. I mean, 23, sorry. This morning it went up like, let me see the price real quick. First reporting, 9.1. I know, it's ridiculous, right? It's like they could buy their own float, the whole float back up if they want to. But hey, the dumb stormtrooper effect, right? Now, I just recently listened to a segment from Charles Schwab, right? And they are more and more, I've noticed this ever since like the last coverage before earnings even. They're like more and more positive and kind of intuitively kind of like pivoting, okay? And they're not necessarily saying that this is the worst investment of your lifetime anymore. It's just more like, oh, now that they're pivoting into Bitcoin, perhaps this is what their survivability is, even though, they've been pivoting, they've been, trying everything they can in order to make the company a lot more palatable. And again, the reason why these convertible notes has been kind of offered to, institution, which I hate, right? Because I want to participate too, if I can, because I'm retail. But nonetheless, though, these type of offerings is also kind of put a stamp of approval for other institution to be like, look into GME the most serious, more seriously, okay? And so while, they're telling their media folks to just hush hush and try to cover it in a negative angle, still you could still see a small hint of positivity coming in. Now, they're not going to full on promote GME as the best investment until they're ready to sell it to the masses. And so you might have to wait a couple more years before they kind of like full on promoting it online, right? We've seen this happen over and over again, to the point where, hey, perhaps again, you learn to think, to read in between the line. Just because they're saying something to you doesn't mean that it's going to pan out that way. If you understand what this type of events is, you wouldn't necessarily say it's bearish at all. Either they're incapable of understanding it. Now, I'm not saying like retail are selling, but if there are people who are selling and fed up with what Ryan Cohen is doing and thinking that it's dilution, current dilution is a bit kind of hot-headed, right? But eventually those people are going to come back for sure. Like if they're selling it right now, thinking it's going to go down to $18 or whatever, right? To try to catch that. And so, but whatever price is going to go to, just expect it to go there. But also too, I wouldn't necessarily thinking like, oh, okay, if I sell this real quick, it's gonna come down and I'm gonna buy it at double my shares. Although that could happen, like I said, that don't necessarily will happen every single time. And so that's why I don't ever X out of my position completely, ever, right? Only reserve for a small portion that I will, okay, sure, let me just play this, play this game as well. And so, again, that's why they have their own strategy. I know a lot of people, sell covered call and all that stuff in hopes of this type of events. And of course, yes, you make a correct choice if you did that. But again, to me, it's just way too risky to do that on at least like most of my shares. But yeah, so the calls that I sold on my option account, is now able to be closed at my selling point here. I sold way back, but I'm thinking this would be the time for me to buy it back. And yeah, we'll see. We'll see. Now, currently, I don't have much cash here, so I might trim from MSDU to come back. I got some MSDU just to play the volatility on MSDR. So with that, I might come back from MSDU to go back to GameStop again. Again, this is my trading account, so I'm not advocating people, but it's a long journey for sure, and so you have to entertain yourself in some way, shape, or form, right? It's all about, again, consistency, how much you're able to accumulate, as much as you can, whenever you can, however you can, right? That's the name of the game, obviously. Before everything is just way too expensive for you to buy into, and so the name of the game is to buy at the low, buy at the dip, and then sell at the high when everybody is like, to the moon tomorrow type thing, right? And again, as long as you're able to come out ahead, however short period of time or long period of time, it really doesn't matter. Depends on who you are as an investor. Are you long term? Are you short term? Are you a hybrid? Are you doing too many things, right? Don't get me wrong. Sometimes I feel like I'm doing too many things. And then it end up, being detrimental to my portfolio. But also too, sometimes I'm like, I'm making the right choices here. Now, as far as those calls, I know, it's it's not pretty right now. But can you imagine if Ryan Kitty would have come back, right? Remember when he was buying those calls a year ago? We keep like nudging him that he might be coming back soon. But when he bought those calls, the average cost was $23. So that's not the call, but the share conversion that he was doing at the time to 9 million shares. Is he still around? I don't know. We'll see. Now, with Bitcoin, of course, there's so many development coming out and lots of promotion on Bitcoin, on TV, on media, on whatever. Michael Saylor is going crazy. Michael, Pearson shows and kind of like lay a lot of kind of fundamental type things. If you understand those type of calculation, right? You necessarily is not going to be sitting on your hand. So while GME already have some GameStop, so let me GameStop. Heck, hold on one second. What's going on here? What? Am I not signing in? That is concerning. Okay, let me sign in real quick, you guys. I'm not sure why it keeps signing me out. I'm trying to look for my trusty spreadsheet, and it's not allowing me to. Okay, give me 1 second. I will be back to life. Okay. Hey, what's up, Matt? Thank you. You will. Let's go. Michael Saylor got replaced as CEO for wasting millions of dollars on Bitcoin. Maybe, I don't know. That might be the That might be why Bitcoin's going down in price. Is that what's happening in the news cycle right now? Not quite sure, but again, regardless, Jimmy has close to $8 billion here, cash on hand now, and yeah, they could do a lot of damage here. You think 4 billion could do a lot of damage? 6 billion, 7 billion, $8 billion. Excuse me. Could do a lot more damage. Yeah, crazy, huh? Crazy. So again, people will want to entice Brian Cohen to go all in on Bitcoin, and saying that he's sitting on his hands and feet and not doing anything exciting and all that stuff. I don't know. I mean, again, he talked about it, which I kind of assumed that was going to happen, and it's the same speech that he kind of similar to one, right, from last year, saying that he's not necessarily gonna telegraph anything, thank you for being a shareholder type thing, where he's gonna continue to make the company more profitable, and that shareholders gonna be able to get the appreciation of their shares. Not in the short term, obviously. It's more long-term thinking. So your shareholder equity just got added to your shares. So per share now, you're gonna have more stuff built into it, asset, whatever, or the company equity, the convertible notes, the what else, the Bitcoin holding, right? And so if they are going to buy into some company and all that stuff, they're not going to necessarily announce it on the most, when people are paying attention to it. They will announce it when no one paying attention to it, or they're just going to do it every quarter, whenever possible. Okay, that they're going to see the opportunity to buy into anything right now. Individual stocks or I would love them to get into like some of the privately owned company that are about to IPO and all that stuff. That's also another possibility too, where they're small enough, or they're not necessarily in the market yet. So because that's the only way that they could get some maximal value out of the company going public and all that stuff. So that's more an opportunity than any of this, Nvidia or buying into some publicly traded company. Of course, one advantage that I am seeing already is buying some amount into Bitcoin. But again, people are getting mad that he doesn't buy a whole bunch more than just he did, than what he did. But again, it doesn't mean that they're not doing it right now actively. Of course, they probably are doing it actively. And so maybe that's a reason why the price is coming down, to try to fill those orders from the institutional side. Again, things like that happens, you guys. I'm telling you, like, people don't realize that sometimes the price drop that makes no freaking sense it's just that. It's that a whole bunch of institutions wants hundreds of millions of shares, or hundreds of millions of dollars worth of shares. And so the only way to do that is to bring the price down so that they're not skyrocketing those shares, and so fill those orders as quickly as possible. And so again, yes, there's an element of exaggerated move from GameStop side here that you see trading hours. During the trading hours, we got decimated. after hours, and then pre-market, and then during the trading hours itself. And look at this like barcoding over here. And so eventually they couldn't hold it anymore, and then you have this amazing like massive candle here, or the selling pressure was just too high that they have to do this type of thing, right? And so this is the result of having market makers who have the monopoly over retail orders. It's classic. And so, you're not going to see those spikes without any halts, without any, restraint. And so if the market is really fair, right, this type of thing would have been halted. Like, you would have been able to kind of breathe, or let people breathe, and, never to see this type of thing. Ryan going to picture. Maybe. Who knows? Like, is that the narrative that you're running with? Sure. I mean, what else? What else can I say about that? No, I don't think so. I think there's an opportunity here for the company to raise money, and whether those are hedge fund or not, they're paying steep price here. On a zero interest payment. I mean, come on, you guys. Like $2 billion is nothing to scoff at here. And so on top of that, you get to use that $2 billion, $2.6 billion right now, right away, to do whatever the companies needs to do with, right? The whole frustration from, the general public right now, or at least the media is trying to instigate, okay, is that Ryan Cohen doesn't do much shit. They don't care about the profitable quarter here. It's like, really? Of course they care about profitable quarter. That's why all these institutions are buying into that bond, right? Without this balance sheet, do you really think that they're going to be just, be able to raise $2-something billion on a market cap of 9? 7, what it was previously, what it was 14 billion. Okay. And so it's advantages, right? If people see this as a dip buying opportunity, what happened last time when it happened that way? People seem to forget what happened last time during this, right? Okay, look. People seems to forget what happened right after, right? You could say, okay, one day, right? This is 1 minute candle. 1, 2, 3, 4, 5. Until the 6th day, then it's going to recover soon, right? And then 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8. So 18 days later, the price is coming back to here. So what do you think's gonna happen, you guys? Like, really? Are we mad to see that the that the price is so low that you could buy more? Huh? Like, what the heck, people? I'm telling you, like, psychology will win out in the end. Okay, I mean, you have to win out your own psychology sometimes. Okay, do the opposite of what these people are telling you to do. Feel the opposite as these people would want you to feel, or have your own conviction, right? Or again, learn about this type of thing. That this type of dynamic happens in the market, and it's just a function of companies able to raise money. Now, we know quite well that this company has been, there's an onslaught of media blitz, okay, that will tell you all sorts of things, okay, that this company is bad, this, whatever, that this company is not going to survive. The only way that they could survive is to sell their own shares. isn't that what the public market is all about? It's to raise capital in order to make your company better, right? So every time he does that offering, we could see that cash is building up. Okay. So what are you gonna do with that cash? So that's has been the frustration for these people that say, well, we don't care about the cash, right? Well, we don't care. There's two camps here. Okay. There are people who are like, we don't care about the cash, right? As long as they could stack it, selling shares or whatever. But shareholder equity will increase over time. Then it's inevitably that Brian Cohen wants you to think long term, right? Short term price action and all that stuff. No big deal. Okay, let me just use that volatility in order to raise my company's money, right? And he's operating it as if he is, the ownership of this stock, of this company. And so when leadership is selling, is telling you like, hey, just like how MicroStrategy does it too, like use the volatility in order to raise money, because at this point, we think that GME is overvalued, right? A little bit, getting a little bit ahead of itself, so to speak, okay? And so to be able to sell at this price and not having to even pay, into this. So in the future, yes, we are, I guess, lowering the company's risk to the downside type thing. Where, okay, let people bet on the upside, whoever, the institution, but let them take the risk that the company will go up in value, right? And then don't pay them anything, right? Typically, institution would not make this a decision on a 0% interest. They would have, not even interested in buying in it at 0 interest rate. No way. And you're locking yourself for 5 years here. Okay. Now, unless the institutional level, they are, for sure that they are either going to get their money back at this price, or that the share price is going to exceed this convertible price in 5 years. Now, the most recent one, it's 7 years. So, and it's accruing more value for that one. Okay. So that's a lot of shares being sold onto the convertible notes, but it's not going to be immediate. Okay. So with that in mind, you could see that all of this money still exists in the company. The company has not been, using it to do anything at the moment right now, right? Not to say they're not going to do anything at all, but at the moment, again, maybe leadership doesn't think they could find anything worthwhile. So we have time to wait. We have time to assess what's happening in the global sense, okay? Now, on the investment standpoint, obviously, everybody is expecting Jerome Powell to lower the rate, but he's not doing that. So, apparently, recently, the Treasury market, Treasury bond, has been bought by the U.S. Treasury, $10 billion more. So far, $20 billion worth of bond has been bought back by printing money. So it's just a quiet way of, putting money out there, printing your own money to buy your own debt back. Yeah, it sounds like a great idea. That's what Japan has been doing, right? So just expect inflation And that's why, again, Bitcoin has been coming to the forefront. And who knows how many ever people understood that, which I feel that's what Brian Cohen is trying to do, at least hedge against inflation, part of that portfolio. And then also to, operating at a much more smaller footprint in order to get the income coming in at the same time. So again, man, like with just the interest payment alone, I don't know how people are just not bullish in this. Like, you're not bullish enough. Guys, come on, okay? And then on top of that, for every shares that you own right now at the moment, assuming that they have not bought any more Bitcoin, you have around 1,047 Satoshi per share. Now, again, eventually if Satoshi becomes $1 each, right? And that is like $100 million per coin for pipe dream. Is that a dream? I don't know. Maybe in 10 years it could, right? Or 20 years. Yeah, I mean, depends on how long you think it's going to play out that way. But do you think, okay, let me ask you this question here, okay? Just to ponder, right? Whoever listening, you might have a few less people now. It's okay. I guess if you have your own opinion, right, you're gonna have less people listening to you. Okay, everyone loves a discount, of course. Varicon loves. Okay, I think I read that one already. Is he planning to buy purchase? Could be. I don't know. How much money does he need? A lot. Apparently, I think, again, here's the mentality I feel like leadership is trying to do. While you have the demand for it, right? Why not take that opportunity to raise money? It's simple, you guys. Like, because there's so much demand. I think I showed you a video on MicroStrategy, and some gentleman was listening to, talking about MicroStrategy, and he said, there's a lot of buyers already lining up. Typically, that's what happened. And when there's demand, these things will be structured after the demand has been setting in. Okay, these things are set up before. Sorry, these convertible notes. It's not just coming out like immediately. It's been planned already because they know that there are buyers already set in place. So with that, of course, this would be the opportunity to sell. And again, these are conditional. Okay, it's not like they are going to dilute the float. And it's beneficial for current shareholder, which people don't realize. Either they're, again, misunderstanding it, or just because they see, 20% today, and they just like mentally, it's like, oh, had I sold this morning, I would have had more. It's like, okay, do you know that it's going to come down to this price? You see what I mean? So again, like you could say, well, last time when it happens, it's at this price. Well, what if they're, decided to go to the other, to buy it back, and they couldn't hold it anymore, right? It could happen, right? And so with that, they have the condition placed on this. So immediately, you are not subject, or the current shareholder are not subject to an immediate dilution, right? So the float is still at, $400 million. 400 million shares. Now, after these notes, either converted to money back, they get their money back, or get some shares and get some money, depends, right? Depends on how they want to convert. Let's say GME, after 5 years, it stay at $30 a share. right, or less than the conversion rate here, GME could just give them $1.5 billion back. Simple, right? So they don't even need to dilute the float, right? Unless these bondholders are able to get the upper hand, where they could convert into share. In which case, GME didn't lose anything. Meanwhile, you get to use this money for free. So again, that's the advantage, right? I know the media is going to run with this narrative where we are loading in debt in order to buy into Bitcoin, or loading in debt in order to, leverage themselves, their balance sheets, over leveraging, right? That's going to be the next narrative, you guys. So just be prepared for it. So with this, right, I don't know if he's going to be doing any acquisition. We don't even need to do anything to make money at this point. Hold on one second. If you are doing the calculation, right, with 5% interest rate now, I know, like I'm just thinking about like higher yield than that, and I was thinking, why not buy into Strife? Right, the MicroStrategy 10% perpetual bond, and with that bond too, Strife, you have the seniority over MSDR equity as well. So you've got the built-in security of a investment grade bond. Right? I know, depends on what you think about Bitcoin. If you think that Bitcoin's going to go up, sure, you think, which I feel like in that camp, then that bond is the most secure ever, right? Because again, you are backed up by the valuation of Bitcoin. Bitcoin used to be the scam, used to be the whatever, right? Now it's like everywhere, and so the popularity is there. The narrative is there to push the price higher. And with this, $10 billion, another $10 billion of treasury bond buying back, again, that's the dynamic here. Do you think they're going to stop there? Eventually, it's going to be $20 billion. Oh, eventually it's going to be $30 billion at a time. So that acceleration is what people don't realize how detrimental it is. It's exponential. And so the system in which, need that exponential growth is not sustainable, guys. So again, that's why, we'll see how things will work out, unless Jerome Powell is going to, make a move or not. Again, he probably is scared about the hyperinflation as well. That's why he's not going to lower the rate or anything like that. But there was some data coming out today that says that inflation is not that bad. So in fact, it's lower than what the Fed expectation would be. So why is he still not lowering the rate? Political, maybe. Who knows? But hold on, let me see if I could find that video here. Now, XRP already had some more news too, so I'm thinking that's gonna also be valuable. And of course, apparently there's some World War III's happening right now. Oh man, there's so much happened today. It's crazy. Hold on, let me see. I want to see if I could find. Watch later. No, not that one. I think. Oh, yeah, this one. Okay, so I think that guy already. Okay. So let's listen into this one.
Investing, it's under 30 time to discuss a fan favorite. That, of course, being GameStop. George Toast is here, senior markets correspondent for the Schwab Network. George, GameStop.
See, you hear the positive tone. Oh, now it's a fan favorite. It used to be the meme stock, the leader of the meme stock, but they could still, see, leader in the meme rally. So still, they still have that description, but the fact that they at least change it up a little bit to say the fan favorite, right?
Gamestop is a fan favorite for so many reasons. Obviously, there's the nostalgia element for people who are my age. There's obviously the roller coaster ride that investing in this name over the years recently has provided. But also this desire to try to find something new seems to be the topic of discussion, whether it's Bitcoin or something else. We heard some statements from the company's leadership today. Walk us through that.
Well, yeah, I mean, we talk about GameStop quite often, and one of the things I did mention or have talked about is the pivot that the business is going through, and it does have nostalgia. It was one of the, if not the leader in the meme rallies that we've seen since the beginning of the pandemic until now. Looking at the last 5 years, the stock is up, I think, over 17 or 100% or so. This is just roughly speaking. So it was a windfall for those who caught that wave to the upside. But the fundamentals at the end of the day make a difference for long-term investors. And I think that's what we're seeing. As the company's moving quite volatile in the last couple of years, and actually as of recent being down because the company is going through just a major transition. Its core video game retail business is declining in sales. The company is mitigating costs by closing unprofitable stores, revamping their real estate, improving operational efficiencies. But nonetheless, the challenge for the company is top line sales. Even if you look at
so it seems like they're covering it a little bit more fair, in terms of like more nuance, kind of throwing into the report rather than just, oh look, top line revenue's down, and all that stuff, right? They don't really getting into the nitty gritty of yes, you have to cut down costs, expenses, and all that stuff. So the best thing about this company is that we cut down expenses more than the decreases of the revenue. And so that's why we're able to come ahead, profitable with a small footprint. Much more smaller footprint makes more money. Why would you want to expand making less money? Again, right? It's kind of backward here. Because when you are operating a company, you want to make more money as you grow. It's not like you grow despite the fact that you don't make more money. So why are you growing? So that means you're growing too fast, that your foundation cannot support you. You're like the top heavy person, right? Have you seen chicken? Chicken is kind of like that, like you wobbly wobbly feet, and then you have like big body up there, So there you go. So we don't want that. We want like stronger foundation, grow, but grow slowly to the point where, hey, we're healthy. The healthy growth is there. Yes, cash pile is enormous. While we can raise money, why not raise money now? Why wait until we couldn't raise money to raise money? So, and also too, I'm sure if you're of the belief that there's a lot of shares being sold to the public, more than the actual float exists, then these offerings, is a like it doesn't do much, right? If the float is sold, let's say 5 times over, the company just did, 70 million shares? Because the last time it was 50 million shares. So with this calculation, it's probably coming out to be around, I would say 60 million shares, right? I haven't done the math yet, but so around there, okay? So with that amount of shares being slushing around out there, either people are the diamond hands, right? People who buy in and then just never sell. They will love this type of price, right? And then that is going to push the price more towards people who wants to buy it at this price. Okay? And again, long term, if you don't see this opportunity right now, right in front of your face, I don't know what else, to tell you, except that the company is gearing up to make a massive amount of money here, by not doing anything at all, right? Just continue to issue share every single quarter. Do this, right? This quarter do it, this quarter do it, next quarter do another one, right? And then just push the maturity date every 2 years. So every quarters in which, here's another thought that I have, you guys, like, you have no idea how crazy this is. The meme darling, but oh, okay. I mean, if that's what you think about killing the cult following, okay. Hey, no, I don't think this type of thing will be. It's not strong enough to kill GameStop if you know the value proposition of this type of strategy. Okay, so here's the thing that I'm thinking about that people don't realize. So here's a signal. Okay, so every quarter he's gonna try to do this, I feel. So remember, when he issue it, he issue at like 2030, right? Then he push it to 2 years. Imagine if the next round come in. Let's add that real quick. Oops. I feel like if I do this, okay, and then, okay. So the next one would be next quarter, right? If they are, what the heck? There we go. Okay, that's way too many numbers there. Okay. Oops. Why not just delete the whole thing? Better. So the next quarter, do another one. Raise another whatever, how many billions he could raise. And then just every quarter, just push 2 years ahead. So this would signal to the people that are not, quote unquote, closing down their short, right? Hey, buy now, or otherwise next quarter you're gonna have to be buying, the convertible notes at a higher valuation, even worse. And then there you go. That's how the game is played, perhaps, again. And every time he does this, yes, shareholder equity is gonna keep increasing over time. The floor is gonna be a lot higher than it is today. Meanwhile, again, people will be less likely, okay, to be enticed to buy into calls. And then also too, here's another thing. Let's say this is going to end, quote unquote, the short squeeze, right? This stock would be allowed to be naturally moving upward. Why? Because now there's no form of manipulation anymore, because there's no short. Nobody is shorting this company. Nobody is actively, go out there to do all this tactic of a short attack or whatever, right? So no artificial, whatever. So it's just straight up fundamental, how much money is coming in, how much money coming out. And then people could make this decision, okay, to trade based on the true fundamental and supply and demand for the stock. Have you ever thought about that? So even if in the worst case scenario, where yes, indeed, Brian Cohen is trying to kill the short squeeze, sorry, you still have that upside potential. You might not have that upside potential, for the reason that you wanted to, or for the price target that you wanted to. but the downside protection will be protected by Ryan Cohen. So think of it that way. I mean, if you don't think of it that way, I'm sorry, you're missing out. You're either, not even thinking ahead of time, or, not in here for long term. Now, my opinion just so happened to be 50-50, because I'm thinking, okay, well, there's a narrative out there that tells you to stay away from this company. And so why are they doing that? And then going out of their way to cover, GameStop in a negative light so many years. And now all of a sudden it's like, oh, it's like this and this and this. These people should have been more honest about the company before that, right? And so again, perhaps this is like it still have some of that float that they have not been able to solve. So again, how many more shares that they could sell depends on how many shorts are out there, right? How many short sellers are shorting the company. And so that's why, again, you see you see this upside being offered, because they're like, hey, I need more shares, right? So, but again, people are comparing Ryan Cohen to Adam Aaron, which is a very different type of dilution here that is more accretive to shareholder equity at the current moment. Now, I'm saying shareholder equity, okay? I'm not talking about stock price today, okay? Oh, thank you. Appreciate you. Now I understand why Ron Kitty unfollow. Oh, okay, yeah. I mean, that could be the reason too. He did say there was a frustration of, Ryan Cohen doesn't telegraph anything, right? Not really following. But I don't know. I don't know that if that's the narrative, then okay. Then there's no more Rowan Kitty. But again, I don't think GameStop needs Rowan Kitty to come back in order for it to do that amazing, quarter after quarter, getting into the S&P 500 and all that stuff. So that still could happen within the next 2-3 years, right? I would love to think that we could do it within this fiscal year, because like it's kind of closer to the end already. So we only have 2 more quarters in order to get into the S&P 500. Can we do it? I don't know. We'll see. I mean, we have the balance sheet for it, for sure. Profitable. We're not losing money or anything like that. So we've been net positive for quite some time, for the last 3 consecutive year, right? Oh, okay, annually, yes. So 3 consecutive year. Hold on. No, actually we have more. Look, 4 years. No, 4 years, sorry. 1 quarter, 2 quarter. Quite a bit of time already, you guys. Look. So 1, 2, 3, 4, 5, and 6. Right? 6 quarter. So 6 consecutive quarter of positive net income coming in. That's good. That's good for the balance sheet, for sure. I mean, look at this. Come on. If they suck as a, operator, terrible business operation, right? Whatever the narrative is. Why are they able to do this? Right? Look at this. That's crazy. Okay? I mean, what? How can they not be successful moving forward? not only Icon Killer Squeeze, he is giving the chance to the bond buyer to hammer as possible. Okay, cool. I mean, if that's what you think, Carlos, I think, did you sell the share today, or you're out of the play? Do you still have a share, or are you just? I know you're venting right now, but I wouldn't think of it that way, honestly. This is the discount for sure. Like, I'm so bullish still. Like, I still have my share, and I'm like, why would I be selling at this point? Because no more short squeeze. Like, what? Are you kidding me? Like, that narrative doesn't make sense to me at all. I know most people, perhaps this is what they're investing in this company for. You know, for me, I invest in this company for the right reason, which is the fundamental play, turnarounds. You know, not only turnarounds but thriving as time goes on. Right? When you have this type of companies that has been, right, look at the shareholder equity, you guys. I'm telling you, the narrative needs to change for sure. If Carlos, if you are frustrated, I want you to kind of think about it this way. Okay, don't worry about the price right now. I know sucks. I'm with you. Okay. But look at this. Okay, like if you do a thorough what is it? Okay, within a year, they are able to accrue value to shareholder equity. You see this? From this to this. That's a year and a half, right? First quarter. Okay, so 1 year ago, shareholder equity was at 1.3. Okay? 1 year after, because of the dilution and whatever narrative that you're thinking of, now it's 4.5. Okay? And then with this one, with this convertible note, now you have even more shareholder equity. Okay? So let's see how much of a percentage of growth for shareholder equity due to, yes, dilution or whatever, convertible notes coming from. Okay, so 3.1, I mean 1.3 minus, I should do it the opposite way, but whatever. Say 5, right? I mean, we could round off to 5 billion, right? Sure. And then you divide that by the original, which is 1.3. That gives you 2.8 times more value to shareholder equity. So if the dilution is so bad, why the valuation is so high? Why there's some value in here, right? So it just go to show that leadership is not using this money, to buy Lamborghini or anything like that for themselves. No, it's for the company, and the company has more money now to do whatever they need to do with. So it's harder for them to kill a company or to bash a company that has $5 billion. Now we have even more money. So how can you publicly tell people this company is a terrible company anymore? And then people are going to just look at you as like you are an idiot online, right? On the news, on the financial news. And that's why I'm telling you, this is why you begin to see them covering it as such right now, because it's glaringly, like, even the the most uninformed people who knows how to do math would be like, GameStop has how much money, right? So they cannot hide that type of thing anymore. And so I think that's the strategy here, is that, okay, if you keep covering GameStop in the worst light and have this nuance of, whatever, and not really seeing the transition, right? Because when people seeing negative whatever, negative earnings, negative whatever, they only see that GameStop is declining, right? Now, when they see this massive amount of cash, mountain amount of cash, who can deny that GameStop is going to survive? And so, yes, it might take that much money for people to be like, oh, what? So, yes, we will need as much money as possible for people to see that mountain of cash and say, okay, all right, yes, Gmail is actually a good company. And so now they are covering it as if they know that, right? So more and more people are going to be like realizing it now, okay? Now, institutions already know this. They know that, right? That's why they bought the convertible note and now buy more convertible notes in order to do that. So, I mean, that's just my thought here, you guys. Like, you have to give yourself a little bit of breather when it comes to this type of price action, and that this is the pricing window, right? Because otherwise, instead of giving, if they don't attack it as egregiously as possible, imagine if they are unable to drive it down to what the price it is today. What is it, like 22? Then they're unable to pricing this VWAP or whatever. This VWAP would have been at 34, 35. And so with that, it's unfortunate that the market structure is set that way. And so I'm like, I don't blame it on Ryan Cohen for selling it at this price, because that's all they could do. I mean, as a publicly traded company, you could only do certain things. Now, I don't know if they could set their own price. I don't look hard enough to know that is allowed. I don't know if GM is going to be like, okay, I'm selling convertible note at $50 or whatever. I don't know. That would be amazing, right? But is he intentionally doing that? But I really think, again, he wants a natural, flow of cash to come in from the institutional side and also the retail side too. It's a leverage for sure, because I think the volatility is needed for this company stock to be traded a little bit higher. Again, like, volume is needed for sure, you guys. Like, anytime there's volume coming in, because we're so convicted as a retail investor, right? We don't want the majority anyway of people don't want to sell. Every time they buy, into whatever price, they just keep it. So no, I bought more. Okay, good. That's all we could do at the moment. But so when you buy it at that price, right? So let's think about this as well too, because this is important. I feel like, I've covered this before when people, were, very upset over here. When they're upset over here. Oops, let's see. Let's go to $20. Kind of closer to what we're trading right now. Tomorrow it might come down to a little bit more, to scare a little bit more people, right? To create the impression that the company is doing the worst thing ever on the planet. So with that, okay. So let's just move it up here a little bit, just for easy math here. Okay, so over here, if you were to buy, right, you have a 50% equity. Okay, Why? Because back then you have, you know, book value of $4 a share or something. Okay, $4 a share. Here, if you buy, it's still at 50% equity. Okay, because book value, we have what, 6 billion or something at this time, right? Well, 5 billion. Okay, so I might get the wrong amount, probably 4 billion something. But even that 4 billion, you buy it over here, it's still at 50% equity. Okay, the equity doesn't change even though the price goes up, because they were able to increase the book value during that time. Okay, it goes up during that time. So the same way with here, but because they're able to raise so much, in addition, so far within this time frame, how much did we get? $3.7 billion, assuming that this round is going to be this one. This probably more, actually. But anyway, so for the sake of simplicity, let's go with this one. So 3 point something billion. So that's going to add to, to that book value. So $8.7 billion in cash. And we know that, up until this point, we still have the Bitcoin holding. Right? I know, small amount, but still there. So now with this book value, right? Let's just go with that cash amount there. Again, it could change. Hold on 1 second, you guys. Okay, there we go. So right now, what is the share price? You said you bought it at 21.50. Divided by, no, actually. Am I doing this right? 8 billion divided by, I think I did $4 a share, I think, over here. Hold on, let me go back here. Goodness. Craziness, huh? Okay, so $11 a share. But I think it's increased to that one. Goodness. What am I? Somebody please help me. I'm trying to figure out what the equity per share would be at $21. Oh my goodness. 21. Okay, so let's try to do this math again. Crazy, huh? I could have just asked Google, huh? Okay, so 21 per share at this particular dilution. We haven't have any diluted share yet. Okay, so currently, this is the amount of shares we have. So 9 billion. Okay, so 9 billion divided by, I think I have to flip it to get to the market cap. Okay, so the market cap divided by the cash amount. Okay, so what is the cash amount again? Okay, so I'm gonna divide it and then I'm gonna flip it. Okay. Okay, and then flip. Okay, so 90% equity. So congratulations. When you buy a share at 21, you get 90% equity. So immensely more profitable if you buy it here at 90% equity versus over here. Okay, so when you're crying, Just remember that, right? So let's see. I think I did that right. So 90% here, 90%, 50% equity here, and 50% equity here. Okay. So the opportunity to buy at this price is larger than the opportunity here. Why? Because back then you had more risk, less money on the balance sheets. We were not quite profitable yet, right? We're not massively, building anything, for people to be excited about, right? And so at that price, it's going to only yield you 50% equity. Now you have 90% equity. So yeah, that's how I look at this situation. And do you really think it's going to just stay there forever until the end of time? I don't think so. People are going to see this opportunity as well. They're like, what? They only trade, one-time cash? And then immediately it's going to go back up again. So understand the dynamic too. There will be infinite amount of shares in which we could sell, right? And remember, when people are like, these short sellers or keep shorting the stock and all that stuff, and all of a sudden they're afraid of like people selling shares when the company have sold, into the bond market, quite a bit of shares there. Now this is artificial. We know that. We know that this is what they do in order to price the bond so low so that they could scoop up at a lower price than if it's naturally trading VWAP at $29. Can you imagine that? And so they're trying to save billions and billions of dollars over here. Now I wouldn't blame Brian Cohen for that. I would blame the regulator for that, for to have this type of structure in the market where a market maker is allowed to do this. Okay, so like I said before, publicly company could only do certain things, right? And when they raise money, they need to go with whatever the laws stated the rule is, to avoid any litigation, and that's also detrimental to the reputation of the company too, right? And so yeah, Brian Cohen is constrained for sure. When it comes to raising money and not having market maker doing this, right? Who knows? I'm just assuming that that's what's happening here. Okay, I have no proof. I have no data to back it up, or it could just be naturally people just fed up and sell. I mean, that could also be true as well. You see a spike of volume here. So let me see if I could find a OBV. There we go. So maybe that will tell us a little bit more. Yeah, so people did sell. This is daily, but weekly, look, I mean, comparing to what is happening back here, people diamond hand this thing, right? And then not much of the selling there for the weekly. Let's do the monthly. Yeah, monthly still. So again, this is why we have the opinion that the share has been sold, not yet purchased, however many times over. The float is sold way too many times. And so technically Ryan Cohen could just do this. Like take advantage of the volatility of the equity market and then issue it to bonds. the next bonder, I would love him to offer to retail, just like what Michael Saylor is doing. That's why I always say, like, let retail participate in the bond market as well. So that's going to be more fun for retail. So, but again, there might be a reason why they don't want to do that. I mean, if you issue a preferred share and all that stuff, right? Whether it's going to be legal, so they might have to study what MicroStrategy is doing. But again, we have our own strategy, and so whatever MicroStrategy does, it works for them, right? Yes, we have Bitcoin on the balance sheets now. Perhaps from now on, we're just going to do 10% in perpetuity, right? Instead of just all in all the time and indiscriminatory. So yeah, that's just my thought here, you guys. And yeah, I need to go. So let's see. Do I have anything else? I'm trying to see if I forget anything before I go. Hold on. All right. Okay, looks like more money there. All right, guys, I think that's all I have for today. And yeah, I will see you when I see you. Thank you for joining, all of you.